Yesterday was the RRSP contribution deadline for 2020, which means it's time to start thinking about filing your taxes.
For this year, what's important to keep in mind is that they haven't extended the deadline. So last year we got a bunch of extensions in terms of filing and when the payments were due, but this year it's still April 30th is the deadline to file. And as of right now, that's still the deadline to get your payment in. So that's one of the most important things, is that we are still under that regular tax crunch that we felt in previous years.
If you worked from home for the first time because of the pandemic, you'll be able to file for an additional deduction.
Everyone working from home last year, the government's kind of simplified it. So there is, if you've worked from home up to 200 days, your employer required you to work from home. There's a simplified method where it's $2 per day, so you get a $400 deduction on your return. And there's still the old way where you would claim part of your utilities, part of your house. It would be based on the square footage you're using for your regular business purposes.
If you started a small side business this year, it's time to round up those receipts.
Small businesses, especially in Canada, are one of the best kept secrets. It's a tax shelter. It's one of the best kept tax shelters. So a lot of people, like to your point of, they've been at home, they've started doing a tie-dyed shirt or whatever it is, they've got this side business. So keep track of the expenses and things related to that business, because you can write off those losses with your side business, or side hustle, as everyone seems to call it now, against your regular income. And it's one of the ways outside of RSPs that a person who might be salaried might be able to make some deductions. Keep in mind, CRA does have there has to be a reasonable expectation of profit, but you can run with losses for a period of time.
For those who received the Canada Emergency Response Benefit, or CERB, it is considered taxable income.
It's important to note that you might find yourself in a position, depending again on your income, where that might be taxable, because you could find yourself in a situation where you're paying. Unfortunately, that message might have not been as clear when it was being handed out by the government, but now we're in a position where that could be pushing your income up for the year, and you're looking at possibly not getting a refund or possibly having to repay a small portion of it in tax.
If you missed the RRSP deadline, it's never too late to start planning for next year.
I wish RSPs didn't really have a season where it wasn't cut off as of March 1st, which is yesterday, to make your contributions, because a lot of times tax planning should be happening all year round. So if you haven't done any tax planning in the past, when you are speaking with your advisor, your accountant, your financial planner, whoever's doing your returns, now is the time to start looking at what you can do in terms of organizing your taxes and your finances in the future.
Reporting for Halton News, I'm Nikki Wesley.